To make money in crypto, we have to use data most people are not looking at. We need to get an edge. We need to get information that most people do not use. Let's have a look at some on-chain metrics that most people aren't considering. Now, there's a very interesting relationship between the price of Ethereum, its market cap, and the total value locked in decentralized finance. So what we've got over here is the market cap of Ethereum in orange and the price in blue. And we can see how the market cap diverged slightly above the price when starting at the exact same point. And that's because there was some inflation for Ethereum, as in some tokens got printed, or should we rather say mined. But since the merge on the 15th of September 2022, Ethereum became ultra sound money, as in the supply actually is going down most of the time. Not recently, because at the moment Ethereum isn't used that much, the gas fees aren't that high, and so there is still net issuance. But since the merge, overall supply tends to go down. Before that merge though, there was regular mining. And if there never had been any merge, then that would be the supply development. This chart starts before the merge, and that's why we see this divergence. But compare this chart with this one. This is the total value locked in decentralized finance on Ethereum. And why is this so interesting? It's interesting because just compare those peaks. The DeFi total value locked peaked out at around 110 billion. Now we are roughly at half of that size. The Ethereum market cap, however, is very close to its all-time high. So what we can say is that DeFi hasn't recovered as much as the Ethereum market cap. Now, why is that? I believe it's because DeFi has a lot of inherent leverage. So when you deposit your collateral, say Ethereum, and you borrow against that Ethereum, or you maybe mint a stable coin against that Ethereum, then you're pretty much adding more to the total value locked of DeFi. But that's 100% leverage. So the newly minted DAI tokens, for example, right, the DAI stable coin, that's now new purchasing power that you can use in other places. However, when Ethereum goes down below your liquidation threshold, then you have to also return those DAI tokens, then you get delevered. And it appears that all of that leverage built up during the DeFi summer, that leverage got completely crushed in the bear market, and now people are a bit more cautious. So the prices we see today compared to 2021 are less artificially heightened. There's less leverage baked into the recent prices of Ethereum compared to 2021. That's healthy. One reason why Ethereum was able to recover better than DeFi might be because of the continued increase of its staking. So when you lock up your Ethereum, you can get rewards, of course. Bitcoin moved from proof of work to proof of stake. And when you're staking your Ethereum, you probably plan on holding it for longer, thus reducing the supply that's actively circulating, thus also supporting the price. And so that's the amount of Ethereum staked over time. It's increasing, not as quickly anymore as in the early days, but still we are now at 32 million of Ethereum that's been staked, and that's definitely helping the Ethereum price, together of course with that tokenomics change, that there's no more new Ethereum hitting the market. Now, not everything is rosy for Ethereum, because now we've got the layer 2 solutions that cost less gas fees, so there's less transactions being made directly on Ethereum. The number of active wallets is also not increasing, and that's obviously some kind of headwind. If you've got a technology that isn't growing that much anymore, then that's a problem. Here's the number of Ethereum weekly active addresses, and it's fluctuating quite a bit, but we can definitely say that in the last 2 to 3 years, there was no clear growth anymore. And so what used to be a price that's been driven by active usage is now a price that's been driven by investing or long-term holding. And because of that, it's not that surprising that Ethereum isn't outperforming Bitcoin anymore, even since that merge. So the arrow shows when the change happened from proof of work to proof of stake. This is Ethereum relative to Bitcoin, and we've seen a quite constant underperformance, of course, also because Bitcoin has a lot of demand from the ETF. Or should I rather say, used to have a lot of demand from the ETF. This is the Bitcoin ETF net flows. This used to be very positive most of the weeks in the past. Now, since the middle of March, we are hovering around the zero line. So some weeks we see inflows, some weeks we see outflows. We don't see obvious growth anymore in the Bitcoin ETF. And so maybe we've got some kind of a floor here. The problem though is that we need a catalyst for people to get excited about Ethereum again. The technical developments obviously didn't help enough. What I believe could be a real driver is once we see proper rumors around a Bitcoin ETF approval. So far though, it seems like the SEC is very strongly fighting that approval. It doesn't seem to happen this year. So the real question is, what is the next narrative that could drive Ethereum demand? Let's compare Ethereum with Bitcoin. This is the price performance after the halving for Bitcoin. And the recent halving actually had the worst performance, as in we dropped by 11%. This is 2 months after the halving roughly. In the past, the outperformance tended to happen at the end of those 2 months. So let's see where this is going. When Bitcoin goes up, probably Ethereum can go up as well, right? There's quite a bit of correlation between the two. Let's have a look at the difference between the realized cap for the short-term holders for Bitcoin versus Ethereum. Bitcoin has seen a lot of short-term holders taking profit recently. And that's of course bad for the Bitcoin price. Historically, when there was a lot of profit taking, then we tended to decline afterwards. For Ethereum though, we haven't seen nearly as much profit taking. So this would be another indication that maybe Ethereum could outperform. But again, we do need the narrative. Momentum is a thing, and currently the momentum is not really in favor of Ethereum. Here's a different way to look at this. This is again Bitcoin versus Ethereum, the spent volume in profit in the last 6 to 3 years. And again, we see a lot of profit taking for Bitcoin. Once we see all of that profit taking, momentum slows down. We see much less of that happening for Ethereum. Again, that could be seen as a positive sign. Now, how do I see all of that data? How do I interpret all of those charts? In general, I believe that Ethereum does have limited upside potential, right? It's already the second largest cryptocurrency, so people aren't really getting that excited about ETH. That being said, the tokenomics are sound, the staking is going up, so long term, this is relatively solid as a store of value. That being said, Bitcoin seems to be less risky. The problem is always what's driving demand. There needs to be some kind of anticipation for future demand for the current price to go up. Currently, the momentum for Ethereum isn't that great. And so even though we've got less sell pressure now in Ethereum, and even though we are at somewhat historical lows relative to Bitcoin, I'm still waiting for that narrative. I want to know why Ethereum should be outperforming. What could be the next driver for demand? I don't see that yet, unfortunately. Technical slight improvements aren't enough to move the needle. We have seen this in past updates as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. The link is down below. Feel free to join.